Hello everyone, good morning to all of you. Welcome to UN Digital class. Today I am going to discuss a new subject regarding basic financial accounting, and relating to that subject we are going to discuss the users of accounting information system, the merits and demerits of accounting. So one by one we will discuss everything. Accounting information of a business enterprise is used by many stakeholders. Different parties use this information for different purposes depending on their needs. Therefore, the accounting information system of a business enterprise must be designed in a way that it should generate the reports to satisfy the information needs of every interested party. We can broadly divide the users of accounting information into two groups: internal users and external users. Internal users include managers and owners of the business, whereas external users include investor, creditors of fund, supplier of goods, government agencies, general public, customer and employees. So coming into the part of users of accounting information system, generally accounting is called as an information system. That means after recording the monetary transaction affect to the business during a particular period, the results declared by the organization or by the person responsible for maintaining the account, who is known as accountant. So this information is presented in the form of a report, and this information is supplied to different interested parties. Those are directly and indirectly associated with the business. So they are called as the users. That means the persons or the parties, those are associated with the business, they are called as the users of a information system. And these users are divided into two parts basing upon the needs and information. So internal users and external users. So the internal users generally the management and employees or owners, and external users those are directly and indirectly associated with the business. They may be the supplier, they may be the creditor, they may be the regulatory agencies, government, tax authorities, customers, publics, etc. So the various users, those are internally and externally involved with the system. They need the information supplied by the business, and based upon the information and the needs, they will take decision whether to invest with the business or attached with the business organization or not. So that internal user and external user will discuss everything relating to that. So basically this is the users of information system. One is internal users, another one is external users. Internal users, one is owner, second one is management, third one is employees. Coming into external part, the creditors and financial institutions, second one is investors, third one is customers, fourth one is tax authorities and regulatory bodies, the fifth one is government, then researchers, and the seventh is general public. So those are associated with internal and externals that will be discussed one by one. The first one is internal users. Internal users use a mix of management and financial accounting information. Some internal users of accounting information and their needs are briefly discussed below. Coming into internal users, so we can say that they use the mix of management as well as financial information supplied by the organization. So those are the internal users. They are called as the one is management, second one is employee, or third one is owner. So coming into the part of management, management uses accounting information for evaluating and analyzing the organization financial performance and position to take important decision and appropriate action to improve the business performance in terms of profitability, financial position and cash flows. One of the major role of management is to set rules and procedures to achieve organizational goal. For this purpose, management uses information generated by financial as well as management accounting system of the organization. So management is one of the basic important part of the organization. That means managing the activities tactfully is known as management. Basically, the managers of different organizations or managers of one organization in different department, they are directly associated with the systems to take all the information supplied by the organization, and based upon the information those are associated with the management, they can assess the financial position or the profitability of the concern, and based upon the financial position and profitability they will take decision for future. That means how to plan and where to plan and when to plan everything. So that is one of the basic important part for the management to decide everything relating to the performance as well as financial position. That means to assess the income position as well as the financial position of a business during a particular period and take decision for future growth and development of the organization or the concern. So it is one of the important role player for the organization development. The second user or internal user associated with the accounting information system, who is known as the owner. So what is its role towards the organization? Owner invest capital to start and run the business with primary objective to earn profit. They need accurate financial information to know what they have earned or lost during a particular period of time. And on the basis of this information, they decide their future course of action, such as expansion or contraction of a business. In small business like sole trade or partnership, owner themselves perform the function of a management. So owner is also one of the most important part or user of the organization or information system. Basically, the person who start the business or who contribute money or money's worth towards the business, they are known as the owner or the entrepreneur. As they generally invest money or money's worth, which is known as the capital of the business, so they must have certain objectives, and every owner for the organization having one objective or the most important objective is to profit maximization. So to know the profit or how much loss has suffered by the business during a particular period, they have to take information or all type of financial information from the organizations, and accordingly they will take decision whether to expand the business or whether to contract the business. In case of a sole trade business or partnership business, those are the owner, they are called as the management. But in case of a company form of organization, management is basically little bit different from sole trade or partnership organization, because company is a form of organization established under Companies Act. So their management is consist of certain board members. But in case of a sole trade, that is one person, or in partnership business, two or more than 2 persons. So the person, those are the owner, they are called as the management. Now we are going to discuss or focus on the external users of the information system. External users normally use only financial accounting information. Some external users of accounting information and their needs are briefly discussed below. Investors. In corporate form of business, the ownership is often separated from the management. Normally, investors provide a capital and a management run the business. The accounting information is used by both actual and potential investors. Actual investors use this information to know how their funds are used by the management and what is the expected performance of the business in future in terms of profitability and growth. On the basis of this information, they decide whether to increase or decrease investment in corporation in future. But potential investor use the information to decide whether or not a particular corporation is suitable for their investment need. So we will focus on external users. The first one is investor. Investor, they are called as the owner. That means those invest the money for future growth or development or running the organization. Basically, investors are very cautious at the time of starting the business, because they invest a huge sum of money and they take certain amount of risks. So based upon the investment, they expect return on their investment amount. So actually the owners or the investors are basically divided into two parts. One is actual investors and the second one is potential investors. So the actual investors, those actually invest the money and they needs or they expect everything based upon their investment. So they are very cautious during the starting period of investment amount, because they involve with a huge amount of risks. So they have to decide everything from every part of the business and whether their investment will make a profitable for the organization or not, or they expect what they expect they get or not. So that is the one of the most important part for actual investors. But in case of potential investors, they use accounting information to decide whether a corporation or not is basically suitable on the investment needs. So that is the basic difference between actual investors and potential investors. The second one is lender. Lenders are the individuals or the financial institution that normally lend money to business and earn interest income on it. They need accounting information to assess the financial performance and position, and to have a reasonable assurance that business to whom they are going to lend money would be able to run the principal amount as well as pay interest thereon. So lenders are the persons those supply money or those provide money to the business for the growth and development. So at the time of providing money, they expect a certain rate of interest on their amount which is provided by them to the organization, and before providing the money they must have to assess the financial performance or the position of the organization to who they are going to supply the money. So if the financial performance or the position of the business signifies a positive impact, then they expect that the organization to whom we are providing money on lending basis, so they will provide the principal amount as well as the interest amount with the reasonable time period or with the expected time period what they decided at the time of providing the money. So that is very important. Before providing the money to the organization, they must have to assess the financial performance as well as the financial capability to repay the principal amount as well as interest amount. Then the next part is supplier. Suppliers are the business individuals or the organization that normally sell merchandise or raw materials to the business on credit. They use accounting information to have an idea about the future credit worthiness of the business and to decide whether or not to continue providing goods on credit. So suppliers are the persons, they provide goods or the raw materials on credit basis. So before providing materials or goods on credit, they must have to assess the credit worthiness of the organization, because the organization to whom they are supplying materials on credit basis, they must have to repay that, and their financial capability to repay the amount of the goods which is supplied, that is very important for the supplier point of view. So supplier must have to assess the credit worthiness of the organization. Then the next is government agencies. Government agencies use financial information of business for the purpose of imposing tax and regulation. So it is one of the important part, or external users basically associated with the information system for imposing tax and for imposing various policies or rules and regulation for the organization. And the organization must have to be very cautious and must have to be aware about the tax return as well as the policies or the rules and regulation time to time implemented by the government agencies. The fifth one is general public. General public also uses accounting information of a business organization. For example, accounting information is a source of education for students of accounting and finance, a source of valuable data for those researching on organizational impact on individuals as well as economy as a whole, a source of information for the people looking for job opportunities, a source of information about the future of a particular enterprise. So general publics are those are associated with the organization as a part of external users. They must have to be assess everything, and accounting information as a source of education for the student for learning accounting as well as finance, and it is a source of valuable for those research on organizational impact, and it is also a source of information for the people looking for job, because in present scenario accounting or the organization those are implementing the accounting software, they are needing the professional peoples, those are able to handle the organization systematically, and it is also act as a source of information about the future perspective of the certain enterprises. Then the next part relating to customers. Accounting information provide information to customers about current position of the business organization and to make judgment about its future. Customer divided into three groups. One is manufacturer or producer at various stages of production. Second one is wholesaler, and third one is retailers or end users of a final consumers. So basically customers need the information time to time, and customers are divided into three parts: manufacturer, those providing the products and at various stages of production. Second one is wholesaler, then the third one is retailer, and finally the goods to reach at the consumer point of view. So manufacturer or the producer at every stage of processing, they need assurance that organization in question will continue providing input such as raw materials, parts, components, support it. So manufacturer, as they manufacture the goods or produce the goods, they always need of inputs such as the availability of raw material in sufficient quantity, the parts or the equipments or any other supporting documents which is necessary for producing of a goods or generating the final product. The second one, wholesaler as well as the retailer, they must be assured of consistent supply of products, as the wholesalers and the retailers, they need a product, so there is no burden for manufacturing the products. They always need to supply the products at a sufficient quantity as and when required, and a manufacturer always supply them to fulfill their needs. And the end users, who is known as the consumers, they are interested continuous availability of products and related accessories. As consumers are the end users, they consume the goods, they always need sufficient availability of products or related accessories, and because of this reason accounting information is significant importance. The next one is employees. Employees who do not have a hand in core management of the business are considered as external users of a accounting information system. They are interested in financial information because their present and future is tied up with the success and failure of the business. The success and profitability of a business ensure job security, better remuneration, job promotion and a retirement benefit. So employees, they do not have a core hands in a business organization. As they are employed for the organization, they must have to assess the organization performance, and based upon the success and failure their future is determined. If organization earns huge amount of profit, that means there is a positive source of income, and employees, they have enjoyed various types of benefits during the time of service, and after service or retirement they also get the various retirement benefit. If the organization is in failure stage or loss making, in that case there is a chance of losing the job from the organization for the employees. Now we are going to discuss the second part of today's discussion, that is merits or advantages of accounting. The first one is complete and systematic record. Accounting records information or monetary transaction systematically for the particular organization during a particular period to assess the growth and performance of the business. So as and when the organization affects for a particular transaction, the business must have to record that transaction in terms of money for the books of accounts, and the systematic recording of a business transaction ensure the organization to find out the profit in a systematic way. The second one is valuation of the business. It is one of the merit point for the organization, because during the time of a sale of business or in case of a merger or acquisition, in that case the business performance must have to be determined, and that will be determined from the balance sheet or profit loss account. So when accounts maintain the income statement as well as position statement, that helps the business to determine the value of business, whether the business is having profit or not, and accordingly how much the business has been evaluated, and based upon that the restructuring capability or restructuring should be made. The third one is helps in raising loan. So at the time of raising loan, that means the amount which is contributed by the owner, it is not sufficient at all stages to run the business for future growth and development. So every owner or the entrepreneur, they must need from money from different other sources, and this need of money is known as a loan or raising of loan, and raising of loan is very important for the organization, and those are supplying the money or providing loan, they must have to assess the future performance or the profitability position as well as the financial position of the organization. And if the organization financial statement shows positive, then in that case the organization or the financial institution, they are ready to supply money in the form of a loan for a certain period for a growth and development. The next one is evidence in court of law. During the time of any problem arises or complication arises or legal matter arises, in that case the accounting information or the report is act or helps as a proof of evidence in the legal court or a court of law. Any person or any employees or anybody, those who wants to file a case against the organization, in that case organization supplied the all type of a financial supporting document to the court, and court take the decision based upon the organization information supplied. Then inter-firm and intra-firm comparison. Organization based upon the accounting information or the report have to make comparison within different department of a particular organization or one organization with the other similar competitors or organization, and in that case the financial performance of one organization with other organization or similar organization, if it has been determined properly, in that case that will help the business to find out the demerit point as well as the merit point, and accordingly the decision will be made. And a department comparison also support the organization to find out the merit and demerits of several departments working in one organization. It facilitates audit. That is one of the important part, audit. Every organization they needs audit, and after a particular period overs, the organization based upon the financial performance or the position statement, one auditor is appointed and they audit the accounts from different angles, and accordingly a report is generated that organization financial position or accounts determined properly or audited or verified by the auditor properly, and that ensures a legal proof of evidence in every cases. Then effective management, every organization, those are management system is very effective. In that case, the organization shows the positive impact. If management is not efficient, in that case organization is not declared as a good system of organization maintaining the records properly. Then the next one is determination of selling prices. The selling prices of the product, those are produced by the organization, that determined properly based upon the recording of a monetary transaction in different forms of accounts, and that will ensures the organization to maintaining of accounts properly. Next, we are going to discuss the disadvantages or the demerits of accounting. The first one is express accounting information in terms of money. Second one is accounting information is based on estimates. The third demerit, accounting information may be biased. The fourth one is recording of a fixed asset at original cost. The fifth one is manipulation of accounts, and the last one is money as a measurement unit changes in value. So we will discuss one by one. The first one is express accounting information in terms of money. That means accounting records only monetary transaction affect to the business during a particular time period. There are certain non-monetary transaction also affect to the business, but accounts not record it, and that non-monetary transaction affect to the business very severely. For example, in case of a death of a owner or leaving the organization and joining another organization of a particular employee who is having very efficient, and based upon its efficiency the existing organization makes huge amount of profits. So this type of transaction or events, that is non-monetary events, and accounts not record that non-monetary events, and that is also having several impact or major impact for the organization. So that's why it is one of the demerit, as accounting records only monetary transaction. The second one is accounting information is based on estimates. There are some accounting data which are based on estimates, and that inaccuracy of estimate is possible. The third one is accounting information may be biased. Accountants' personal influence affects the accounting information of the organization. Different methods of inventory valuation, depreciation method, treatment of revenue and capital expenses, etc., that can be adopted by the accountant for measurement of income of the entity. So biased means if accountant is based upon its own interest treatment or implement a single method, in that case that is called as a biased information system. So in certain cases there are several methods of treatment in accounting, but accountant based upon personal influence treat one methods, and in that case that also makes any type of a significance different for measurement of income of the organization. The next demerit, recording of a fixed asset at a original cost. There can be a difference between original cost and current replacement cost of a fixed asset due to efflux of time, change in technology, and hence balance sheet may not show the correct financial status of the organization. So we record the fixed asset at its original value, and at the time of determining the financial position, the fixed asset must be recorded at the original cost less depreciation, because due to change in time or efflux of time the value of the fixed asset must decreases, and the balance sheet that's why may not show the true financial position, because the existing assets value is not equal to the current market value, and that is a significant change in the reason that asset value changes, and that is not reflect the true financial status of the business. Then manipulation of accounts. The accountant or management can manipulate or misrepresent the profit of an entity in certain cases if they want to increase the profit or shows the profit at a higher stage and wants to cheat to the government, then in that case they have to manipulate or misrepresent the information and makes a huge amount of profit. Money as a measurement unit which changes in value. Stability in the value of money is not possible. It changes significantly based upon different monetary factors or economic factors. Accounting information will not show the true financial position if change in the price level are not considered. So if you will not change or if you will not consider the change in the price level, in that case we cannot suggest or we cannot determine the exact value of the business, and that exact value of the business, when it cannot be determined, in that case that do not show the true financial position or exact financial position of the business or relating to a particular entity. So this was my discussion in today's class. In the next class we will discuss accounting principle, which includes various concepts and a convention. So thank you, having a nice day.